Welcome to the WakeCon show, where we discuss housing economics and the economic forces shaping our communities. We're powered by Professor Lending, which is a residential mortgage company based in Wake Forest, North Carolina, hence Wake and Econ together. That forms WakeCon. I'm Jordan Steffaniak, host of the WakeCon podcast or YouTube show, licensed loan originator, president, Professor Lending, and your home mortgage and home finance professor. In today's episode, I'm going to be covering the topic of AI in mortgage finance. So if you take any look around the internet, you'll see headlines and news about AI overtaking things, about how places like better.com are going to introduce a completely digital, completely AI-based mortgage experience. Cool. Is that good news or bad news for the consumer and for you? I'm going to show you guys real quick an example here so that you just get a sense for what this looks like. So there's this Beeline, which is apparently access the same loans the property tycoons use, imply minutes, where you can come in here and do everything instantly without talking to a person. Fast, stress-free closing, cool. Close now and your next refi is free, blah, 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 blah. So it's got stuff in here. Great. You can go buy with Beeline. What do I do? You just, from your couch, you get started. Looks real nice, I guess. Let's see what loan's right for you. Boom. What are you going to do? I'm going to buy. You got this little lead funnel, I guess. Let's just put in some stuff here. Okay. So you see, I'm not going to go all the way through. The point here is that these things exist. The question is, are they good for the consumer? Well, if they passed on savings to the consumer, that's a good thing, right? The question, though, at that point is, will they pass on the savings to the consumer? Why would they? Are they a charity case? No, of course they're not. They're just gonna have fatter margins. If all your competitors are at percent interest rate, why would you go down a whole percentage point? You wouldn't. You'd get pretty close. Maybe you'd beat them by a little bit, and then you would keep the rest in your pocket to provide to your shareholders or to provide to your owner or to provide to your employees or whatever. So will there actually be savings passed on? Probably not. Just to be honest, that's how businesses work, right? At least that's how I have always seen and understood them to work, especially in more capitalistic societies. The other question is this a better experience for a buyer or somebody who wants to refinance? Well, I'll tell you, I can't imagine this being a better experience for a buyer. This is probably the most important financial transaction you'll ever make in your life, and you're trusting an automated machine to hopefully get it right. Do you want to know that, Tin Man or whatever Better's called, or these AI things? Do you want to ask Bob, the AI agent, where your closing documents are when you're supposed to close because they haven't been delivered yet? Of course not. You want to talk to a human person that you can get a hold of and know that urgency needs to happen, and you need to go figure out a solution and make sure that I understand when I'm closing and where I'm closing and how this is going to work. You want to talk to a human person. Do you want an AI machine taking all of your most important financial data, taking all of your important personal data, and hopefully giving you the right output, and hopefully protecting all of your data? Of course not. You want to trust a human person who actually understands the importance and the confidentiality of that information. So, in my opinion, would you ever buy with one of these AI tools? Absolutely not. That's my personal opinion. I don't know why you would, because at the end of the day, you want to close on time. You want to have transparency and honesty and trust. I'm never trusting machine. I'm sorry. When it comes to these sort of transactions, it's really important that they're timely, and I can't trust a machine to be timely. I don't have any of you used any of these AI tools. You quickly realize they lie all the time. And when you catch them lying, they say, "Oh, I'm sorry." And then they lie again. And it gets this perpetual pattern. They're extremely deceptive and they have no ability to actually take responsibility for their actions. Do I want that when I'm trying to close on a house in a week? No, I do not. I want a human person. Even if they fail, I want them because they actually can be held responsible, whereas a machine cannot. Refinances, does it make sense? Maybe. There's no real timetable, there's no real risk. So maybe there's some value in there if I could get a much better competitive offering than a human person would provide me. But again, I don't think that's actually going to happen. I think the margins will be compressed and they'll just keep whatever extra they get, and you're not actually going to get passed on any additional savings. So while I'm sure that more of these will proliferate over the years, I'm still confident that in the mortgage industry and other large, important financial transactions, people ultimately still want to trust people. They don't want to trust a machine. They want to trust somebody who has a beating heart, who actually cares, who actually has compassion and sympathy, who actually understands the stress and the pain and all that goes into this. They want to trust a human person. And that's going to be the end of the story. I think a lot of these things are going to end up not really going very far. I know some of these are saying partner with Credit Karma and all these different things. At the end of the day, I don't think people really want that. Do people want savings? Yes, of course, but the savings aren't going to be significant enough to trust a machine that could probably do it wrong. They're going to pass over a loan that doesn't actually make financial sense or isn't the best opportunity for the buyer or the person refinancing. They need a human person who actually understands how all this works. There is no replacing the human person when it comes to these types of transactions because they're built on trust, reputation, and relationship. I don't care what anybody else says, that matters. You're not going to be saving $15,000 by going through one of these machines. You're not. You may end up spending an extra $15,000 because they give you the wrong deal that a human person who's an expert and has trusted experience would know. So, no, they'll make some money because there's going to be foolish people out there who go and trust it. But at the end of the day, you still need a human person. So does AI disrupt the mortgage industry? Some, but people still need people because this is one of the most important financial transactions you'll ever make. So do you agree with me or do you not? I'd love to hear your take. Drop a comment below if you think that I'm wrong or if you think I'm right. I'd love to hear from you and like the channel.